Hey, good afternoon. It's Chris Robinson, Robinson Ag Marketing with today's post-close grain and livestock comments for Thursday, the 13th. Well, lucky day, lucky 13 for grain producers. An early Thanksgiving, perhaps, heading into this USDA report tomorrow. D's corn hit 441 and a half on the settlement, traded as high as 442 and three quarters. That did take out the July third high at 442 and a quarter. So this is the highest price we've had since June 23rd. So a 5 month high. We're going to call it a 5 month high in D's corn. Just a great opportunity. Um, we finally got above that 200-day moving average, which have been terrorizing us at 436. So the question is, what will the USDA do to that tomorrow? Any way you cut it, I'd rather be making uh, going into a USDA report on a high rather than being trying to dig out of a ditch. Just so you know, the low this summer, 392. So 392 to 442. I'd say that's something to be thankful for. And also, we saw red corn. It looks like it's going to go try and get the 475 print. Again, really good action. The next level I'd be looking at for red corn is 475 and a half, and then we get back up into the June high at 477. So it's heading the right way. Will it last? I don't know. The reason we don't know, that's the reason we hedge. In the beans, another impressive day as this just keeps powering higher. Um, no confirmation of any actual sales from China, but it sure looks like someone's buying futures, right? And I think that's kind of the generally accepted idea now is that they're getting long the futures market or they didn't buy in the cash market. In any event, GM beans, the highest price since June 13th, going all the way back there to see this high again. We hit an 1150 and a half print. You got to remember, just a month ago, October 1st, so call it 5 weeks ago, we were at 1012. So if you don't call that a gift, I don't know what is a gift. We've gone kind of vertical now. Certainly something worth rewarding heading into a big USDA report. Red November, 1121, 1123. Take a look at that chart real quick. Um, that is the highest price again since June of 2024. So just a great marketing opportunity. If you look at the low this year for 2025 for red November, we were at 992. So from 992 to 1121, um, just a tremendous recovery. Again, I sound like a broken record, but you got to remember a month ago we were watching people on the news walk around, mope around, saying how terrible the bean market is. That was probably a reverse indicator. By the time somebody from New York City cares about what's going on with soybeans, it's either on its highs or its lows. The next scary report I would see is if they do a report saying, "Oh, look how great soybeans are doing." That'll be the kiss of death. So anyway, you cut it. Great opportunity heading in here to the USDA report. Great place to be. This is why when we were selling into this rally all the way up in soybeans, we always suggested reowning them on paper after the sale. We were selling into a dollar rally. We've rallied another 25, 30 cents since that sale. So the only way to have participated in that after a cash sale would have been to have some cheap calls on. Guys who work with me, some of you did it, some of you didn't do it. At the end of the day, that was a good strategy. We'll see what happens. I would say this: if you're scared to sell into this rally, a dollar 30, dollar 40 rally here, I would say go ahead and make the cash sale, but then re-own it with a cheap call. You can stay in the game and you can use the house's money. You just made a chunk of money on those bushels. Hold back a little bit, but make it a limited amount of money so you don't get whacked. Because we just saw what happened when the market corrects. When you look at cattle, it took 10 months and a grinding, tremendous rally, and then in the matter of 15 days, we gave back, half of it, if not more. So you don't want to have that same scenario play out where we've had a tremendous dollar 40 rally in beans, and then 15 days from now we're 70 lower. That's why we hedge. Um, and so again, I'm excited about whatever happens tomorrow. I hope it's bullish. If it's not, everybody got a chance here to make some good hedges. In the wheat, that was a sleepy story. Wheat had a couldn't even manage a 10-cent range. and finished down a quarter cent. Kansas City finished up a penny and a quarter. If you want the actual numbers, I'll give them to you here real quick. Dees corn up 6 1/4 cent at 441 and a half. Jam beans up 13 1/4 cent at 11.47. It did trade as high as 11.50 and a half. Dees corn traded as high as 442 3/4. If you're working with me, you know we hit our cash sale target here. Finally, we've been waiting for months, and we've got more to sell. But we got to reward the rally. Got to stay with the plan. And if you can't bring yourself to make the sale because someone at the coffee shop told you that corn's going to $7, okay, at least get a hedge on books, right? Get your risk on paper. Switching over to cattle, talking about risk. Feeder cattle down, February fat cattle down $6, not quite down the limit, although they were flirting with it at the end of the day. We traded as low as 218. We settled at 218.95. Again, just been some wild and crazy trade there. We had that hard break back on the 6th. Then we had a couple limit up days where it looked like we were going to go back and try and fill the gap up there at that 233 level, which we've been talking about. There's a gap there on the chart, which has everybody excited. And boy, today, just a turnaround uh, punch in the face to anybody that thought that we were going to go get that rally. And right now, cattle is some of the hardest day trade you're going to see. I've been doing this since 1991, and this thing's trading like cotton in a big market. It's very, very, very whippy. They're going to, cattle could end up being called the widowmaker. Cotton used to be the widowmaker because it was so volatile. But it's like trading lumber, right? You're getting less and less people that want to be involved in this because there's more and more risk. Because of that, when you have less liquidity, you have bigger daily moves and you have uh, more violent price swings. You saw that today, and I'm looking at Jan feeders right here, right now. Again, everybody's looking. I mean, we got caught looking up. People thought that maybe we were going to go fill that gap up there, which starts getting filled around 340. Well, we finished today at 318.450, down not quite limited Jan. March was down limit, finished down at 311.775. Now, are we going to be limited again tomorrow? I don't know. We've seen this type of action before where something changes and then tomorrow, we could have a short cover and rally heading into the weekend. Something crazy comes out in the USDA report with grains that could cause a reprice. So stay frosty, stay on your toes, and whatever you're doing, if you're buying or selling, you better keep your buy stops and your sell stops tight because you don't want to get run over here heading into the weekend. Finally, lean hogs. We thought the hogs might have a better recovery than they did. Lo and behold, we're right back down, making a fresh low, back to the July low, the July 15th low. Didn't quite get it, but we're flirting with it with this 78 level, 78 cents. Yes, it's crazy. Just 3 days ago, we were at 83.25, and people were wondering if we're going to run back up to 90 cents. Just a perfect example there of why, if you are a producer and you don't have time to be sitting in front of the screen all day and trading, you're out living your life, taking care of your farm, raising your family, taking care of your kids, taking care of your responsibilities. Lots of times using a put option or a call option is your best strategy. If you want a downside protection, you need the put because the put is there. It's there until it expires, no matter what the market does on a crazy day trading move. Just in the last, 3 or 4 sessions in the hogs, we've had just a tremendous amount of volatility. I don't see that going away. We'll see tomorrow if 78 cents holds. And again, I guess my big takeaway is what a great opportunity for grain producers, for especially corn and soybeans, not so much wheat. Wheat's fighting for its life down there at the 5-year lows. But certainly a gift to producers because we have not had a heck of a lot to work with in 2025. To be back where we are now at 16, 17-month highs in soybeans, to have corn at the highest price since the July 4th weekend, a great opportunity. Again, if you're looking for help, give me a call 312-638-8868. This is Chris Robinson. If you're not getting my letter, sign up for it. RobinsonAgMarketing.com.